Trade relations between Europe and Russia are cooling. Both sides are looking for alternatives elsewhere. It's time for your business brief from Berlin. I'm Monica Jones. It's good to have you with us. Now, Russia has been hit hard by sanctions over its role in the Ukraine crisis, and that's one of the main reasons Moscow has signed a series of business and finance deals with China. Chinese Premier Li Keqiang visited the Russian capital on Monday to put his name to energy, trade and finance agreements, a clear sign that relations between Beijing and Moscow are on the upswing.
Russia's Prime Minister Dmitry Medvedev and his Chinese counterpart Li Keqiang signed no fewer than 38 agreements. The aim is to boost trade and investment in the energy and finance sectors.
I consider it to be extremely important that we are opening up new possibilities in spite of the difficult situation that we are in today.
Closer economic ties with China will help Russia ride out Western sanctions imposed during the ongoing Ukraine crisis. And China will benefit from greater access to Russia's vast mineral reserves. Moscow has already pledged to build a pipeline to deliver Siberian gas to the resource-hungry, heavily industrialized Chinese coastal region by 2018. A new financial pact will give Russian banks access to a generous line of Chinese credit. Russia's second-largest bank, VTB, is set to benefit most from the deal. A currency swap will also help increase trade. Medvedev and Li also pledged closer cooperation in a host of areas including agriculture, space exploration and satellite navigation. Relations between the two countries have traditionally been hampered by mistrust. But the Western embargoes are forcing Russia to forge ties with the Asian economic powerhouse.
And Western pressure has also led to those infamous tit-for-tat sanctions, which hurt both Russia and Europe. France, for one, is already struggling with a sluggish economy, and Russia's embargo on Western food is making matters worse. The ban doesn't only include fruit and vegetables. French cheesemakers are also feeling the pinch.
Cheese is his life. Pierre Bourbon has been making brie for 20 years, like his father and his grandfather before him. To help make ends meet, Pierre Bourbon also sells his brie cheese to Russia. But ever since Russia imposed an embargo on EU food imports, sales have suffered. His turnover has fallen by 20%.
There will certainly be another drop in sales, not least because the embargo will last another 2 to 3 months. If turnover continues to fall, we will have to consider letting people go.
But Bourbon's is not the only firm to suffer under Moscow's sanctions. Some 40% of all French food exporters have been affected by the Russian embargo. Before the Ukraine crisis, Russia had been developing into an important growth market for French food products. Nicolas Médard exports cheese, butter and yogurt to Russia. Between 2012 and 2013 alone, his sales there grew 150%. The embargo has hit his business hard.
It's as if you built a house and then it collapsed. Now we have to build it all over again, brick by brick, wall by wall. We have to regain our clients' trust and hope that the consumers will still want our cheese.
And the embargo could have further consequences. Market researcher Tatiana Castouet-Verjon works for a leading French think tank and has followed the
collapse of the Russian market closely. The
price of food products will fall because there will be a surplus on the European market. The second consequence is the risk for companies which have invested massively in setting up production in Russia. Their production chain could be blocked. Thirdly, other export countries could profit by filling the gap, such as Asian or Latin American countries.
Back to cheesemaker Pierre Bourbon. He's found a potential solution to his problem.
We will use clients of our clients. They will be able to sell our products for export. They work from outside of Europe and will be able to sell to Russia.
In other words, Pierre Bourbon will simply relabel his products to make it appear as if they originate in countries like Belarus. The ploy could be decisive in keeping his company afloat until the crisis is over.
Time to check in on the markets. Here's a look at how stocks are faring this Tuesday.
Deepening worries over the global economy dragged Japanese shares down on the first day of trading after a long weekend. The stronger yen also hurt exporters, helping push Tokyo stocks down to a 2-month low. Japanese car makers lost heavily, with Mazda shares alone dropping almost 3%. The Nikkei closed 2.4% lower at 14,936. Investor sentiment was also down in China, despite a cut in short-term borrowing costs for banks. Traders await the release of key September inflation data on Wednesday. Shanghai's composite index lost almost 0.3% in the day's trading.
The Prime Minister of Vietnam is on a visit to Germany as part of a 6-day tour of Europe. He aims to push forward an EU-Vietnam free trade deal in a bid to reduce the over-reliance of Vietnam's economy on China. Now, according to the European Commission data, the EU is already Vietnam's second-largest trading partner. The Southeast Asian nation has enjoyed a comfortable trade surplus for years, and the EU hopes to get a sizable piece of the action.
For 18 years, B. Braun Melsungen has been making plastic tubes, syringes, and drips at its production facility in Hanoi. The Made in Vietnam label means low-cost production for the German company, which makes medical, technical, and pharmaceutical equipment. Hundreds of other European companies have followed suit. They would all welcome a free trade agreement between the EU and Vietnam. It would mean lower or even no import tariffs, legal security, and intellectual property protection for all parties to the agreement. Trade between Vietnam and the EU is already healthy, but the agreement would give an additional boost. In 2013, the EU exported goods worth almost 6 billion euros to the Southeast Asian country. Vietnam exported goods worth almost 4 times that to Europe, over 21 billion euros. Vietnam's footwear and textile industries stand to benefit most from a free trade agreement. And the broader economy would also be able to reduce its dependence on the country's giant neighbor, China, currently its #1 trading partner.
And for more on a possible EU-Vietnam free trade deal, we're joined now by Markus Berger, Asia-Pacific expert at the German Chambers of Commerce and Industry. It's good to have you with us. How would you assess Vietnam's potential as a trading partner for Europe?
We see particular important potential in the Vietnamese market. First of all, the market is growing, and we have relatively low barriers for market entry in Vietnam. As to particular sectors of the economy, we see the most important potential in food processing, food packaging, also in the chemical industry and in medical technologies.
So there are quite a lot of opportunities, but what are the pitfalls? Asian markets, as you've mentioned, have big growth potential, but the culture, also the business culture, is very different to the one in Europe.
The business culture is different, and the structure of the economy is still very different in Vietnam. That's for sure. Just think of the many state-owned enterprises that we have in Vietnam and that are not always working efficiently and economically. We also have a legal system that is not very transparent all over the country. But we should not forget that Vietnam is in a process of transforming towards a more market economy, towards an economy that is following the market economy principles, I would say. And this is coming. This is resulting in opportunities for German and European businesses.
All right, let's stick with the opportunities. How important is Vietnam for German companies in terms of compensating for the losses currently incurred by sluggish markets in the United States and also in Europe?
Yes, as I said, Vietnam has potential, but we should not see Vietnam only as one country, but also as part of a very interesting region, the ASEAN region, the Association of Southeast Asian Nations. And let's say today already ASEAN is the third most important non-European trading partner of the European Union. And this region is integrating even more in the future. So if we have a successful free trade agreement with Vietnam and with Singapore eventually in the future, then we should go on as a second step and have an ASEAN-EU free trade agreement as the last step then.
Okay, Markus Berger, thank you very much for taking the time to speak with us today.
Thank you.
And just enough time now for one last news item. An international initiative to promote solar power says it's scaling back plans to build huge solar generating stations in the deserts of northern Africa. The Desertec Foundation says all but 3 of its partners have abandoned the project due to rising costs and political instability in the region. 5 years ago, 20 international power and engineering firms signed up to develop solar generating stations that could cover up to 15% of Europe's electricity needs. Well, and now you're fully briefed on all the business. I'm Monica Jones. Thank you very much for keeping me company. And do stay with DW. There's more to come. See you soon.